Alibaba stock has been falling off of a cliff for the past couple of years, and within just the past 2 days, we have seen Alibaba rip about 20%. So a lot of people have been asking me, is this something that I would be looking to potentially buy into? How would I be setting up a trade for the next year? I think that this is a huge potential trade, a minimum return of maybe another 50 to 100% in the next year or so. And so I want to go through technically why I believe that that could potentially happen and what will have to happen. If you're looking for a fundamental video on Alibaba, this is not it. There's a ton of other people out there who will just give you the fundamentals. There's no need for me to do that. There's already people out there. But if you want an understanding of the technicals behind the move, setting up the trade, what options to look for, as well as risk versus reward ratio, then you're in the right place. First time frame that we're going to take a look at is going to be the monthly, meaning that every one of these candlesticks that you see here on the screen represents 1 month worth of price action. We are currently looking at the last 4 years of Alibaba. Please understand that this moves at a snail's pace. But the reason that I like to use this for what would I consider a power trade or a power play is because when the trends start to break out, it is a very, very strong trend. So looking at the last time that we had a major breakout here on the monthly chart for Alibaba would have been back here at $200 on Friday, May 1st of 2020, in which Alibaba ran a significant 54% within 5 months. It's a huge return. From there, you can see that we tapped up on this resistance of 311. Obviously, this was not a good time for Alibaba. And from those highs, once we started to break this trend line, we had dropped all the way down 78%, and from up at these highs, 81%. But the time that we would have actually been able to call the trend would have been down within this range. So yes, these candles move at a snail's pace, but when they start to flash green, when buying looks good, is when ultimately you're going to have a massive confirmation. Here you can see that we are starting to trend over the 5 SMA, and we have been holding this for a couple of weeks now. If we move back to the weekly chart, you will see this is the huge green candle that we have for this week. The RSI is pushing up over 60. And to be quite honest, while your best time to buy would have been down at 80, even buying now at $100 is really not that bad. We have a very strong inverted head and shoulders pattern, which is one of my favorite patterns to play. And this occurs when we get a significant drop down. And on the drop down, we end up getting this what would be called your shoulder. So this level right here, followed by what would be considered the head or the lower low right here, followed by what would be considered a shoulder for the second time that finally pushes up, tests what's called our neckline. Our neckline here would be $122.25 right here. And from that level, we break through the neckline and we continue to trend our way up into shmoney. So when watching this, how do we decide what is a good entry price and what we would be looking for? Before we talk about specific options, contracts, and pricing, we're just going to go over shares. The best time to enter would have obviously been down at about $90. That time has passed. You have to understand that the best time is not the right time. Yes, we could have seen that potential entry down at the 80s, but the truth is, if we look at the weekly chart, we were still descending very, very rapidly. And this bounce kind of came, I don't want to say out of nowhere, but it was definitely unprovoked when we were looking at price action. Now, like I said, the best entry would be down at 80, but at this moment, even if we were to enter up here at $103.25, where would we be looking to take profits? Well, if we draw the Fibonacci retracement from swing highs up at $310 back in 2020 to swing lows of about $61 back in October of 2022, you would notice that our Fibonacci retracement level, or the golden zone, is between here at 216 down to about 187. So in my opinion, I think that we will probably continue to push over the next 6 to 12 months and end 2023 somewhere around $188. I think that we could potentially hit 188 and then reject back down to 156, or we can move up to 220 and then potentially reject back to 188 and see what ends up happening from there. But this golden level is really going to be the major resistance levels going into the end of 2023 into the beginning of 2024. Now, that doesn't mean that if we just, bounce from here, it's going to be smooth sailing. Of course, we have a massive resistance here at 122, a massive resistance at 160, another resistance at 188, and then the final resistance up around 217 to 220. But looking at our risk versus reward, it's absolutely disgusting. If we have a price target of 188 and we were to set a stop loss down at 85, then we have a very solid RVR of 5-1. If we were going to move it generously up to 220, we'd have an RVR of 6-1, really 7-1. And if you want to pull your stop loss even even tighter up around 89, you could do that. Now, what my plan is I'm going to take 33% of the total position size that I want. So let's just say theoretically, I want to own $100,000 worth of Alibaba. What I'm probably going to do this week is buy right here around 103. I will go through and buy again on a pullback down to 97. And then I will buy a final time down at about $92 so that I could bring my average to about, somewhere around 96, which would give me an even better RVR of 9-1. So for me, being patient here is the move, but I don't want to not get in yet. I'm one of those people that I've been burned by being a stickler for the perfect price in the past. So I'm more than okay with just starting a small position now. And then if we end up ripping 120% the next year, I'll turn that 30 into 60, and it'll be better than just not getting in at all or getting in at a really bad price. Now, I do want you to understand that this is a company that operates out of China, and the fact that, their laws are not the best for business owners and that there's potential in the future of being delisted. There's a lot of really bad fundamental things about investing in a company like Alibaba, to be quite honest. That's why we've seen the stock fall off of a cliff, even though fundamentally the company's financials as well as everything else looks really good. The thing that you have to understand here is that you have to accept the loss of any amount of money that you would put into a trade like this. I am completely okay with that money being vaporized, worst comes to worst, over the next year or so. And if you're somebody who doesn't feel that way, what you should be doing is probably looking at options. The good thing about playing leap options is that you're not going to have to put up as much money as trading shares, but in the worst case scenario that this company gets delisted, the price gets vaporized, something terrible happens, you're only going to lose whatever you paid for those contracts. So if you really want to go with leaps, I would be looking towards the end of the year, December of 2023, maybe January 2024, and I would not be getting calls out till 160, 170, 180. I would be looking at strikes of maybe 110 max or 100. So I hope this video helps, guys. It's going to be a very, very long play to keep an eye on. I'm going to keep you guys posted the entire way. And I feel that I want to share more of these types of massive movers with you guys and price targets for end of years as opposed to just end of weeks. So I hope this video helped, guys. Hit the like button, subscribe. I'll see you guys in the next video. Peace.